Hello, I'm David Chaston, standing in for Bernard Hickey this week with 90 at 9, brought to you in association with the Bank of New Zealand. This is everything you need to know in 90 seconds at 9, starting now with news that European stocks and the euro currency fell overnight as concern built that their debt crisis is poised to widen. At 58.92 to the New Zealand dollar, the euro is hovering at its weakest level ever. The German government is having to reassess its opposition to increasing the European $1 trillion rescue fund, and it looks like it is wavering. Worries in Belgium are the latest trigger, and the pressure is being piled on by the ECB. Despite these European bond problems, overall world distress level in bonds are at their lowest levels in 3 years. In fact, the big Wall Street banks are selling treasuries in record volumes and shifting into commercial bonds as growth prospects improve. Even Iceland, a complete basket case 2 years ago, is about to get back into the bond market and has reasonable prospects. A real lesson for those currencies tied up in the euro straitjacket about the benefits of an independent floating currency. In New Zealand, slightly better than expected numbers have been reported for Christmas retail sales, and new car and used import sales were stronger in December than expected. Pacific Blue's troubles in the New Zealand market have been widely reported, and their $20 million loss was the catalyst for them pulling out of our domestic service. Now we hear Qantas's New Zealand revenues fell 22% in 2010, and profits were well down. But despite this, their head office is raiding their finances, declaring a $90 million dividend. That's more than a year's worth of revenue for them. I'm David Chaston, and that was 90 at 9, brought to you in association with the Bank of New Zealand.